Hello, good evening, and a very warm welcome to the last session of the Powerhouse Series BFSI. Today, I intentionally included good evening in my greetings because in Lahore it has started to get dark by this time. Usually, it took an extra hour maybe to get this much dark, but the weather is changing and it's getting quite good. Moving on to today's topic. Today, we will be covering the last topic of the BFSI series, and that is Islamic banking. And in order to deliver that session, we have with us a fellow ACCA member, Mr. Yasir Wasim, who has joined us for this specific topic. Yasir is a banking professional. He has over 17 years of experience, and out of that, he spent quite a substantial time in PwC Pakistan, and after that, he joined Mizan Bank in the audit function. I believe that was external audit, but now currently his main focus is on Sharia audits, and he's currently working for a premier Islamic bank based in UAE. So uh, I will be handing over to Yasser because I want him to add anything if I have missed, and then formally kick off this session. So Yasser, a very warm welcome to the to our session of Powerhouse Series BFSI, and I'll be handing over the mic to you so you can introduce yourself and kick off the session.
Assalamu alaikum wa rahmatullahi wa barakatuh to all brothers and sisters. Thank you very much, Firoz, for introducing me. I think you've enough spoken about me. Let's start the session. This is more important than discussing about me. So uh, let's start the session. I will minimize this my camera screen. Okay. Firoz, how can I minimize this control screen?
Okay, Yasser, there is a white arrow on a red tab right
Yes,
above the
yes, yes, I can
microphone
see
icon.
that.
You just click on it and it will
Yes, yes.
minimize your control panel.
Okay, fine. Good. Thank you very much. Once again, Assalamu alaikum wa rahmatullahi wa barakatuh, to brothers and sisters who have joined this session. This is uh, for 1 hour, and we'll be discussing about Islamic banking. Let's see the topics for this 1 hour webinar. We will be covering why there is a need for Islamic banking. What are the differences between Islamic banking and conventional banking? History and evolution of Islamic banking. What are the current market share of Islamic banks? And what are the prospective future growth and opportunities? Firoz, am I audible? People can listen me?
Yes, Yasser, I think
Yes,
you
okay,
just,
fine. Yes.
okay.
My screen is being shared, right?
Yes, that's correct.
Okay, fine. Let's continue. Okay. The other topics are Sharia standard setting. There's still offline. What
Yasser,
happened?
I
The
would
screen is
recommend
not working.
using the desktop application of PowerPoint.
Desktop application. I don't have. I think. Uh,
Is it
wait.
possible if you can share your presentation with me and I can share
Yeah,
my
yeah, yeah,
screen?
yeah. I'm just sharing. Wait, just 1 second.
While Yasser is sharing his presentation with me, I would all request you to type in your questions, whatever your question is, in the questions box, and at the end of the sessions, we will allocate some time for Yasser to answer these questions. sir, I would recommend to stop sharing your screen if you're going to open your
Okay, fine.
mailbox or
Yeah, yeah.
something.
No, 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 nothing. I'm just sharing the stop sharing. One second.
How's the weather in your cities, guys? Is it changing?
Sorry.
Is it getting smoggy? I'm just asking the participants how's the weather changing in their cities? Is it getting cold?
Just give me just give me 1 second, okay?
Sure. Interesting to see some people are expecting rainy weather. Okay, so can you guys see my
Yes.
screen? Let me just put it in presentation mode. Okay. Yes, you can tell me when you want me to
Okay,
switch the
fine.
slides.
Well, great, great. Uh, Still, it's not showing me in the presentation style mode. Can you go to the next slide? Yeah, yeah, great. Now it's better. Okay, fine. So we're discussing about uh, Sharia standard setting bodies. We will look into this session certain topics uh, regarding the Sharia standard setting bodies. We will see what are the reasons for having Sharia standards, what are the bodies who are making Sharia standards, and what are their functions, how much Sharia standard they have developed, and in which areas they have developed the standards. And then in the end, we will look into the challenges to the global Islamic banking industry. So these are the topics you're going to cover in this session, inshallah. So let's look all the topics one by one. Feroz, can you move to the next slide? Yeah. The first topic is why there is a need for Islamic banking. Feroz, go to the next slide. Yeah. In order to understand the need for the Islamic banking, we basically need to understand what is the problem in the conventional banking system. if you see the functions of the conventional banks, there are two main functions are there. First one is accepting deposits, and the second one is advancing loans. Okay, these are two main functions. There are many other functions are there, but just to understand, just to simplify the functions, the first one is deposits, and the second one is loans, advancing loans. So examples of deposits are saving accounts and fixed deposit accounts. Okay, so on these, bank pays interest expense. Bank further advances loans to the customer. These customers can be a retail customer, small and medium enterprise customer, or corporate customers. Okay, the loans can be housing finance, car loan, overdraft, and etc. On these loans or these financing facilities, bank receives interest income. So if you see the balance sheet or if you see the income statement of the a conventional bank, you will see a separate line item, interest expense or interest income earned or interest expense. So the conventional banking system is mainly based on riba, interest, which is absolutely prohibited in Islam. Conventional banks' main income part and main expense part is interest, riba. The riba is defined as any type of benefit in cash or in kind contracted on the amount of loan. So what we are learning in this section, in this section of the session is why there is a need for Islamic banking. The Islamic banking is based on riba, and the Islam or the Quran doesn't allow this. Okay, what is allowed, we will see later in the later slides. Can you move on to next slide, Firoz? Firoz, can we move on to the next slide? Yes. As I told in the previous slide that Quran has absolutely forbidden riba. So where it is mentioned, let's let's go through the Quranic verse. What is forbidden, what is allowed. So it's mentioned in Surah Baqarah, ayah number 275. Allah says that, and I quote here, this is translation, whereas Allah has permitted trading and forbidden riba. Now we will see the repercussions and the severity of indulging into riba. Firoz, can we move on to the next slide? Yes. Allah further says in the same verse, so whoever receives an advice from his Lord and desists from indulging in riba, he shall have what has already passed, and his affair is in the hands of Allah. As for the ones who revert back, those are the people of fire. They will remain forever. So now you understand the severity from the perspective of Akhirah. Now understand the severity from the perspective of dunya if you involve in riba. If Firoz, can we move on to the next slide? Yes, Allah further says on the ayah number 278 and 279, O believers, fear Allah and give up what still remains of riba if you are a true believer. See, specifically in this ayah, Allah has addressed believer and mentioned further that if you are a true believer. In ayah 279, Allah says that, but if you do not do so, then listen to the declaration of war from Allah and His Prophet and His Messenger, Prophet Muhammad Sallallahu Alaihi Wasallam. So now we have learned riba is forbidden in Islam, and Quran has absolutely prohibited it. And we also have gone through the repercussions of indulging into riba from the Dunyawi perspective and from the Akhira perspective. Now let's see if riba is or interest is haram. So what is halal and how the Islamic banking can be developed on further. So let's move on to the next slide. Yeah, Firoz, I think slides are not from the bottom. They are not clear. So if you can just adjust it,
Visible.
is it possible? I think it's not visible to me.
Let me check. Can you check if you're in full screen mode?
Yeah, okay. Even then, uh, wait.
I think that's the maximum amount of
Wait.
zooming.
Still, the last part I am not able to see. Anyways, let's move on. Okay. Uh, just maximize the screen.
Participants, I am just receiving comments from the participants that it's visible to them.
Okay, fine, good enough.
So I think that's
Okay,
not the problem.
yeah, good enough. I'll try. I'm not able to see, but it's fine. It's okay. Can you just maximize the screen? Okay, fine. Yes. So the basis of Islamic banking. Now we have learned that the basis for the conventional banking is riba, which is forbidden in Islam. So what are the bases of Islamic banking? Islamic banking is based on the Sharia law. Sharia law has following sources. Okay, the main source is the Quran and Sunnah, and other than that, ijma, consensus, qiyas, analogy, and ijtihad. Okay, these are the main sources from where the Sharia law is devised, and the Islamic banking is based on the Sharia law. Let's move on to the next slide. Yep. Uh, Now, if we understand that the interest is not the option, then what are the options for us? So the modes of financing available in Islamic banking are following. If you can see on the screen, the first one is shiraka, means partnership, this mudaraba, and then ijara, and then in trade, so muraba, salam, and istisna. Okay, so in if we categorize these modes into relationship, so we can categorize in three categories. First one is called partnership agreements. So musharaka and mudarba are in partnership agreements, partnership relationship. The second one, ijara, is lessor and lessee relationship. The third one is seller and buyer relationship. Mudarba or murabaha, salam, and istisna comes under this category. We will have a brief discussion about all these modes of financing. Let's move on to the next slide. Yes. So musharaka, it means sharing or partnership. In Islamic banking, musharaka is partnership between the customer and the Islamic banks. When an Islamic bank participates in financing new or existing projects, sharing the capital, returns, and risks. Profits is shared amongst the partners on a pre-agreed basis. However, the losses are borne by the partners equivalent to their respective capital investment ratio. So profit can be anything between the partners. They can share any percentage, but the losses are borne according to their respective capital investment ratios. This is musharaka, and then in mudaraba, it is a type of partnership where one party invests in the business. This party is called Rabbul Mal, the one who is having the money, and the other party puts his effort to manage that business. That party is called Mudarib. Any profits earned through this venture are shared between the two parties according to the profit ratio agreed during the agreement, while the financial loss is only suffered by the investor if there is no negligence uh, from the Mudarib, okay, the party who manages the business. The relationship between the deposit holder and the Islamic banks works under the same concept. The deposit holder are the investor, and the bank manages such investment to generate returns to be shared amongst the deposit holder and the bank. This These two types of mode of financing are partnership-based Islamic mode of financing. Let's move on to the next slide. Then we have a rent-based Islamic mode of financing. The rent-based Islamic mode of finance is called ijara. It means to provide something on the rent. This is a lease contract wherein the Islamic bank leases property to the customer in return for a rental payment over a specified financing period. In a layman word, ijara or renting is exchange of usufruct against some lawful consideration. The practical application of ijara is car financing. These are in Islamic banks of Pakistan mostly use car ijara for financing cars. Let's move on to the next slide. The third relationship is the trade or sale-based Islamic mode of financing. Okay, here one party is the seller, the other party is the buyer. There are three types are there, and there further subtypes could be there. Okay, for muraba. So muraba is a form of sale where the cost of goods to be sold as well as the profit on that sale is known to both the parties. Okay, it is mentioned in the contract. Profit and the cost of sales and the profit both are mentioned in the contract, so both parties know the profit which is being charged by the Islamic bank. In the financing mode, the customer requests the Islamic bank to buy certain products for him. So customer requests, customer identify a product which he wants to buy from which he wants to use it, and he sent the request to the bank that he wanted to have this product. So Islamic bank does that for the customer. He buys it for the customer and sell it to the customer on a specific profit, and this profit is mentioned on the contract. This is a simple sale contract, okay, where the cost of goods and the sales are both are mentioned in the contract. Okay, then Salam is also a sale contract, but here we need to understand one specific thing. There are Sharia conditions for sale. There are many Sharia conditions to have a sale to be valid sale from Sharia perspective. One of the condition is that then the subject matter must exist at the time of sale. Okay, there are certain other conditions I'll quickly describe here for the sale because we're discussing about the sale-based Islamic mode of financing. The one condition is that the product must be in the ownership of the seller. Number two, the product must exist at the time of sale. You cannot sell X which will be available after a year, okay, or which will be available after weeks. Okay, so the product must be produced, must be existing, and the owner must have risk and reward. He must be the seller must have the ownership of the subject matter, and the subject matter must be Sharia compliant. You cannot sell pork, you cannot sell wine. Okay, so there are many other conditions. These are the few important conditions which I described for having a sale to be a valid Sharia compliant sale. So one of the condition is the item or the subject matter must be existent. Okay, but Salam is an exception to this condition. So uh, what is Salam? Salam is an advance payment against deferred delivery of good which is not yet born, okay, which will be produced later, which does not exist at the moment. Means a kind of sale whereby the seller undertakes to supply specific goods to the buyer at a future date in consideration of fully paid in advance at the time of the contract of sale is made. There are many specific conditions for a Salam sale to be valid from Sharia perspective. Important one is that all the money must be paid, fully paid in advance. This is one of the main condition. There are many other conditions. There is separate Sharia standard for all these types of Islamic mode of financing, and we will learn about the Sharia standards later in the slides. Who make these standards and how many standards are there and which areas are being covered. So the next one is istisna. Istisna is an exceptional, again, istisna is an exceptional mode of sale at an agreed price whereby the buyer places an order to manufacture, assemble, or construct, or cost so to do anything to be delivered at future date. Generally, the buildings, the big projects like bridges, buildings, railways, they are being financed through this mode of financing. It's just not. It's you can compare this with construction of contracts in IFRS. Okay, let's move on to the next slide. So these were the modes of Islamic financing. We have categorized into three basic categories. One is the partnership, another one is the trade and sale, and the third one is the ijara, which is lesser interest relationship. So we need to understand that in Islamic mode of financing, there are relationships, different type of relationship. Whereas in the conventional bank, the main relationship remains with the lender and the borrower. This is the main relationship. But in Islamic mode of financing, the relationships are very different. Okay, so in order to understand, go to the next slide, Firoz, please. Yeah. So in order to understand the basic difference between the Islamic bank and conventional banking, let's watch this video. Okay, on the next slide, there's a video of 5 minutes. We will be watching this video. One important thing about this video, that there's a misconception that will be cleared, which is specifically mentioned in this video. So let's watch out this video and understand what is the difference between Islamic banking and conventional banking. Yes, please.
I think people might not be able to hear the sound of the video because it needs to be uploaded in the program if it needs to be shared during the session. So
Just
let's try.
try
If
and
we
ask.
cannot,
Yeah,
yeah, yeah.
just try and ask. I think it at least they'd be able to. Even I'm not able to listen to the video. Why? Because I'm not able. I can see the video, but I'm not able to listen the voice. Why?
because because it needs to be uploaded in the program before the webinar starts. So I don't think that will be a problem. I think we can put
Okay,
the
fine.
link
We'll share this.
to this video in the chat box.
Yeah. So can we put this in the chat box and we can play there?
Let me try that. Guys, I've shared a link in the chat box. It's a
Mhm.
YouTube video. You guys can you please access the video through the link, and I'll give you like five
5 minutes.
minutes
This is
so you
five
guys
minutes.
can
Yeah, it's
watch.
5 minutes. Yeah, yeah.
Yeah.
Just let them go through 5 minutes just to understand, so that if they have any questions, so we can take those questions later in the end, or you can send me through the email as well if there are very specific questions. Or we will just take the general questions, okay? And only few questions we'll take. So just go through these videos. Firoz, give them 5 minutes time. It's 5 minutes video, okay? So what's the time now?
Yeah, I'll just give them 5 minutes,
5 o'clock.
and
Yes.
after that, you guys can type in the chat box if you have any feedback, and then we'll move on.
Okay. Firoz, just move to the next slide. Firoz, I think 5 minutes are being gone. Let's move on to the next slide.
Okay, let's move on.
Because we are just left with uh, 25 to 30 minutes. Okay. Okay. Now we will look the other topics. Okay. What are the history? What is the history of Islamic banking? And what are the future growth perspective of Islamic banks? So history, if you see that 1962, some sweeping changes are being made in the Banking Companies Ordinance in Pakistan for interest-free banking. Okay. The next year, Gomer Bank, Islamic Bank, Saving Bank established in Egypt. And then in 1969, Tabung Haji, a finance and investment company established in Malaysia. Then in 1972, that Mid-Gamer Bank project became a Nasser Social Bank in Egypt. And in 1975, 3 years after, Islamic Development Bank has been established to foster the economic development amongst the member countries. And in the same year, a proper Islamic bank, Dubai Islamic Bank, was established in UAE to foster economic development amongst the member countries. Okay, so let's move on to the next slide. These are the developments being made in 1960s and early 1970s. So in late 1970s and early 1980s, following banks have been developed. Okay, in 1975, Dubai Islamic Bank has been established, and then in 1977, Kuwait Finance House in Kuwait has been established, and then in 1978, Faisal Islamic Bank, Sudan, it has been established. In the same year, 1977, Faisal Islamic Bank Egypt was established. In the next year, Faisal Islamic Sudan was established in Sudan. And then 1981, in Bahrain, Bahrain Islamic Bank was established. And in 1983, Qatar Islamic Bank was being developed. So this is how the main big Islamic bank have started their operations in late 1970s and early 1980s. Let's move on to the next slide. Now, let's see what is the current market share of the Islamic banks, how many Islamic banks are there, and how many Islamic finance assets, what is the percentage of growth. So the global Islamic finance landscape, if you see that there's 3.4 trillion Islamic finance asset as of 2020. Okay, if you see the year-on-year growth, average growth, it's 14%. So it was in 2014, 1.9 trillion Islamic finance assets were there, and in 2020, it's 3.3 trillion US dollar Islamic finance assets were there, and the projection is around 4.9 trillion Islamic finance assets in 2025. If you see the Islamic finance distribution, the categories are Islamic banking is 2.3 million total finance assets. Sukuks are 631 billion, and the other FI are 175, Islamic funds 154 billion, and the Kafal is 62 billion asset industry. Okay, the share amongst these categories are 70% is the Islamic overall Islamic finance assets. 70% assets are they belong to Islamic banking. 19% of this Islamic finance asset belongs to Cook. 5% for the Islamic finance, Islamic institutions and Islamic funds, and 2% belongs to the Kafal companies. Number of institutions are mentioned over here. If you talk about Islamic banking, because our topic is Islamic banking, so more than 527 institutes are being developed. This is the report of 2020. So the newest banks are also being developed. So it would be somewhere around 650 plus minus. Let's move on to the next slide. Let's see the countrywide share of Islamic finance. If you see the country-wise share of Islamic finance asset in US dollars as of 2020, so the Iran is leading with 838 billion US dollar, 838 billion US dollar Islamic finance asset. And then Saudi Arabia is near to them, around 826 billion. And then Malaysia 620, UAE 251 billion US dollars, Qatar, Kuwait, Indonesia, they are above 100 billion US dollars, Bahrain, Turkey, and Bangladesh below 100 billion US dollar. Okay, if you see the country wise, the area wise distribution, so you can see that the GCC is leading with 1.4 trillion Islamic finance assets. Other MENA region are around a billion, around a trillion dollar asset. Okay, Southeast Asia is 754 billion, Europe is 119 billion, South Asia 87, and the rest are mentioned over there. Uh, let's see specifically about the Islamic banking in next slide. Yeah, so the Islamic banking, if you see the dollar sign here, so it's describing about 2.3 trillion dollar Islamic banking assets around the world as of 2020. Again, the percentage growth is the same for the Islamic finance and Islamic banking is the same, 14% year on year. In 2014, 1.4 trillion of USD assets belong to Islamic banking, and in 2020, 2.3 trillion, and it is expected to grow at the similar or even at a better growth rate, and it will be achieving 3.3 trillion in 2025. This is expectation. And region-wise, the similar trajectories there, since a similar distribution is there. GCC is still leading in Islamic banks as well, 1.1 trillion dollar, and then MENA is 775 billion dollar, 777 billion dollar, and the rest are mentioned over there. The main are GCC, other MENA region, South Asia 301 billion dollar industry or Islamic finance assets, and South Asia is 178. So this is about the current market share about of Islamic finance, and then specifically to Islamic banking. How many institutions we have? We've gone through. It's more than 600 institutions are there. Growth rate is very good. Is around 15%, and it's going at a phenomenal growth rate. So Alhamdulillah. There's a future for Islamic banking. Let's move on to the future perspective, which we can see in the next slide. Are we missing any slide?
Sorry, Ashif.
Are we missing any slides?
I don't think so. Let me check.
Go back to the, okay, fine. The future prospects of Islamic finance and opportunities, we will see later at the end of the session. Okay, so before moving into the future prospects of Islamic finance, let's understand um, the Sharia standard setting bodies. Let's move on to the next slide. There, in order to, let's move on to the next slide. Yeah. First we need to understand why there is a need, why there is a purpose of having Sharia standards. Okay, and then in the session we will understand what are the main standards, Sharia standard setting bodies, what are their function, how many standards they have issued. Okay, so the purpose of having Sharia standards helps to provide guidance, reduce Sharia non-compliance risks, ensures consistency, transparency, and ensure that the products of different Islamic banks across the globe are comparable. Okay, the following are the main Sharia standard bodies, AOFI, IFSB, and IFM. Let's move on to the next slide. We will review each one separately. Yeah, AOFI. AOFI is called Accounting and Auditing Organization for Islamic Financial Institutions. This is established in 1991 in Bahrain. It's a leading non-profit organization, primarily responsible for development and issuance of the Sharia standards in the field of Sharia accounting, auditing, ethics, governance for the international Islamic finance. One thing I tell you, which is very proud for all of us being Pakistani, is that the Sharia board of the AOFI is being headed by Sheikh Mufti Taqi Usmani. since establishment. They are the Sharia board of AOFE. It has many scholars from Arab worlds, but Sheikh Taqi Usmani is the chairman of Sharia board of AOFE. So it's a proud for us. May Allah give him health, and may Allah bless him. It is supported by a number of institutions. AOFE is supported by a lot of institutions, member countries, including central banks, regulatory authorities, financial institutions, accounting and auditing bodies, and legal firms from more than 45 countries. So currently they have around 100 standards being issued in around 60, 50 to 60 in Sharia, and then some in the auditing side and some in the governance side as well. Let's move on to the next slide. Yeah, IFSB. The second Sharia standard setting body is IFSB, Islamic Financial Services Board, which is based in Kuala Lumpur. See, the two main hub for setting Sharia standards are Bahrain and Kuala Lumpur, Malaysia. Okay, so it was inaugurated in 2002 and started operation on 2003. It serves as an international standard setting body of regulatory and service supervisory agencies that have vested interest in ensuring the soundness and the stability of the Islamic financial industry, which is defined broadly to include banking, capital markets, and insurance. Okay, so if you have interest in Islamic banking, capital market, and insurance, so it has many standards regarding these. In advancing the mission, IFSB promotes the development of prudent, transparent Islamic financial services industry through introducing new and adopting existing international standards consistent with Sharia principle and recommending them for the adoption. Currently, IFSB issued around 36 standards in the field of principles and in the field of Islamic finance, and these are guiding principles and technical notes. Let's move on to the next slide. Yeah, this is the third one. It is also very important. IIFM, it's International Islamic Financial Market, is a global standard setting body of Islamic financial services industry focusing on the standardization of the Sharia compliant financial contracts and product confirmation. So you will see when you go over them, you'll see there are many standards are there. So they are there to standardize the contracts. So you will find master contracts of different modes of Islamic finance over there. Okay, so IIFM is hosted by Central Bank of Bahrain and was established in Kingdom of Bahrain. Next slide. Now, yeah, this I was missing this one when I was saying we have missed some slides. So opportunities for growth of Islamic banking industries. Let's move on to the next slide. Uh, See, in the conventional banking world, the main market for Islamic banks is itself the conventional banks. So all the conventional banking industry is opportunity market for Islamic banks. Other than that, there are many conventional banks which are opening Islamic banking windows to tap the Islamic banking market. Conventional banks are also converting into full-fledged Islamic banks. Examples are Sharjah Islamic Bank. Sharjah Islamic Bank was the first was the first bank which was converted full-fledged into Islamic bank. It was a conventional bank in UAE and converted in 2002. This was the first experiment. After that, Kuwait International Bank in Kuwait was converted into Islamic Bank in 2006. Saudi National Bank was a conventional bank converted into Islamic Bank in 2017, and Faisal Bank, Pakistan, has now been converted into Islamic Bank in 2022. Recently, the board has approved all the formalities, and Faisal Bank would start as an operation full-fledged, will be considered as full-fledged Islamic bank. These are only few I have mentioned over from different regions, but there are many more conventional bank which have been converted into full-fledged Islamic banks. So the market is this one. The banks are converting, the banks are opening up the windows, and the new market, Islamic banking industry is moving into the new market as well. Australia has just opened an Islamic bank. It's the first Islamic bank of Australia. There are Islamic bank has already opened in Thailand. These are non-Muslim countries, but Islamic bank have been opened in these countries. So inshallah, we hope that Islamic will grow into those regions as well. Let's move on to the next slide. Uh, Islamic fintech is also an area which have seen tremendous growth. If you see, more than 338 Islamic fintechs have been registered with ifnfintech.com. Okay, these are in different areas. Some are in the alternative finance, means the conventional banking, conventional finance are there. So Islamic finance are there. The fintech companies have a good number of fintech companies are there in alternative finance markets. They are in blockchain and cryptocurrencies as well. They are in crowdfunding. They are in insurance as well, Islamic insurance as well, the careful trading and investments as well, and payment remittance and foreign exchange, so, and personal finance management, data analytics as well. So there are many categories, many areas where the Islamic fintech are working. If you have interest in fintechs and specifically Islamic fintechs, so just go to ifnfintech.com and see what these companies are doing. Okay, let's move on to the next slide. Yeah, challenges to the global Islamic banking industry. We are left with 10 minutes, I think. So I'll wrap up this session in 5 to 7 minutes, and then we will take a couple of questions, and then we will wrap the session. Can you move on to the next slide? Yeah, main challenges. Following are the challenges: lack of awareness. See, lack of awareness, still in Muslim world, there is a lack of awareness about Islamic finance, Islamic banking products. Some people say that they are the same. I think you have watched that video, whether the conventional banks and Islamic bank are the same or not. So it will be much clear to you they are not the same. The relationship is totally different, and there are other issues of awareness out there. We'll see in next slide. Lack of liquidity management options. Islamic bank are they have they have to really work hard to invest their funds for short-term liquidity. It's not easily available, specifically for overseas investments. Lack of skilled and committed Islamic banking professionals. This is another area of challenge. You can find a lot of skilled, now you can find a lot of skilled Islamic finance professional, but commitment still lacks. Okay, some people are coming from the Islamic banks. They're just coming, they're not believing in Islamic banks, but they are main part of the human resource of Islamic banks. So if you do not believe on the existence of or the value of Islamic banking, so how can you be part of the growth of Islamic finance? Regulations. We will see this later on as well in the slide. We have slides for separate. Lack of global applicability of AOFI's Islamic financial reporting standards. Lack of global applicability of the AOFI's Sharia standard. We'll see one by one all of them. Let's move on to the next slides. Lack of awareness. There remains a low penetration rate and a lack of critical mass in Islamic finance industry. This is due to mainly a lack of public awareness and knowledge of Islamic finance. Islamic banks, regulators, and government should undertake mass awareness program to drive the growth of Islamic finance and create critical mass for the industry. On the other hand, there is a misunderstanding as well. The Islamic banks are the same as conventional. We have seen the video for that. I think things will be clear for you. If you see, because I got to know that most of the participants for this seminar is from Pakistan. So Pakistan, we just have Pakistan is a Muslim country, and the percentage of market share is less than 20 compared to the conventional counterparts. So still 80% share is with the conventional bank, and only less than 20% is with the Islamic banking industry in Pakistan. So there's a huge opportunity for Islamic mm, banking in Pakistan, but awareness is required, and that need to be done by the Islamic banks itself, the regulators, and the governments as well. Let's move on to the next slide. Lack of liquidity management options. There are limited, very limited Sharia compliant instruments available to manage their short-term liquidity. Long-term liquidity is easier and somehow can be managed. You can invest in sukuks, and you can invest in many other options are available. But short-term liquidity, overnight investment, is sometimes difficult. Okay, in some part of the world. Secondary market is also not developed for the investment instruments in some countries. Okay, like sukuk market is not properly developed in many countries. Okay, interbank market for Islamic banking institution also not well developed in some countries. Okay, so we have issues managing short-term liquidity. Let's move on to the next slide. Lack of skilled and committed to Islamic banking professionals. Qualified human resource play a pivotal role in development of and success for any industry. There is a shortage of qualified bankers and professionals who are well versed in Islamic law as well as contemporary economics and finance. Now, see, a banker Islamic banker must have skills and must be qualified from Sharia perspective, and must have qualifications in banking, economics, accounting, and all that. So a combination is required here. Currently, various universities and training institutes are offering across the world courses in Islamic finance. There are good universities in Pakistan. IBA has started a few years back some courses and for masters in Islamic finance. In global, there are very good universities, Islamic international universities in Malaysia and Thomas International Islamic University in Pakistan. There are universities in Qatar as well, and Bahrain and Saudi as well. Okay, so now over the years, like 15, 20 years, many universities have started Islamic finance degrees and courses. Uh, there remains a huge lack of human resource on the expert level. There are many people now entering into Islamic finance market, but expert level still we lack expert level human resource. Okay, there remains a significant shortage of Sharia scholars who are well versed in Islamic finance as well. On the other hand, many professionals joining from the conventional banks don't really believe in Islamic finance. This is another issue as well. Let's move on to the next slide. We are left with, I think, 5 minutes more. Regulation. Now, see, this is a very important part. Why we are not able to grow. The regulation is also a challenge for us for global growth. India is one of the largest untapped Islamic market. You'll be surprised to know that there's no single Islamic bank in India. The total population of India is 1.4 billion, out of which Muslims are around 250 million, which is around 10% of the total population of Muslims around the world. So as per the Banking Regulation Act 1949, trading activities are not allowed for a bank in India. So they cannot start operations as an Islamic bank. So there are huge opportunities of Islamic banking in India, but the regulations are not allowing uh, to start activities as Islamic banks. Okay, let's move on to the next slide. Another challenge is lack of applicability of the AOF's financial accounting standards. AOFI is a standard setting body. They have issued many financial accounting standards. Okay, separate accounting treatments and disclosure requirements are required by AOFI according to the nature of the Sharia compliant product in order to present a true and fair view of the transactions to the stakeholders. Okay, in very few countries like Bahrain, Sudan, and some other Islamic banks are preparing two sets of financial statement, one under IFRS and another under AOFI. But most of the countries, even in Pakistan, the financial statements are not prepared under AOFI. Uh, or a separate financial statement under AOFI are not being prepared under even in Pakistan as well. So that's an issue. If the financial statements are not being prepared, standards have been set, the financial statements are not being prepared, so it cannot be comparable across the world. Let's move on to the next slide quickly. Yes, AOFI versus IFRS. There are few differences why there are few differences. We'll quickly look into these differences between AOFI standards, AOFI financial accounting standard, and international financial reporting standards. Okay, AOFI is less welcoming to the two key concepts in IFRS. One is the substance over form, the other is the time value of money. AOFI is less welcoming. Okay, I have conducted one seminar uh, through ACCA, I think 4 or 5 years back, where I described the main differences between AOFI and IFRS, and we can have the session again, inshallah. So these two key concepts which IFRS have, substance over form, time value of money, they're not very much welcoming by AOFI. Okay, the reasons we will see when we will have this session as well. Difference in objectives mentioned in the frame. AOFI has different objective, IFRS has different objectives. If you see their objectives, and you will understand the differences. Okay, the deposits of the conventional bank are classified as liability under the IFRS, whereas the deposits of the Islamic banks, other than the current account, are neither liability nor equity, rather categorized as equity of the investment account holder and their equivalents. So here you see there is a separate line item being added, which is not in the balance sheet, which is not in the under IFRS. Okay, increasingly use of increasingly used form of leasing. Another difference is again this the practical application of this substance over form. I'll just read out and you will understand. Yes, increasingly used form of leasing by IFIs are ijara muntahiya bit tamlik or ijara wa intaqa. It means the asset will be transferred to the lessee over the period of time, and he will become the owner, which is very similar to hire purchase agreement popular in conventional finance. This is essentially a form of financing which is under IFRS is treated as finance lease as with a hire purchase agreement. The risk and reward associated with the owning the assets uh, in the substance transfer to the lessee. Thus, under IAS 17, the assets would be blocked. I think that the number is changed. IAS 17 would be blocked as, but the recording and recognition is the same. It will be recognized as with the lessee will recognize the asset and the lessor will recognize receivable. But this is not the accounting treatment under AOFE. If you go to the next slide, because the product's nature is different. So by contrast, AOFE's FAS legal form of contract is paramount, meaning that the ownership of the asset remains with the lessor until the legal title is transferred at the end of the lease period. In this case, the IFI would remain the owner and record the asset on his balance sheet in the same way as an operating lease or an operating HRO. I think we have a last slide. Yeah, lack of global applicability of AOFI share standard. Earlier, we saw that there's lack of global applicability of EOFI's financial reporting or financial accounting standard. Now the Sharia standard as well. Islamic law accommodates for difference of opinion and interpretation of classical Islamic texts. This leads to different practices and policies that are adopted across the different jurisdictions. This may impact on the growth and internationalization of the Islamic finance industry. For this reason, standardization and the harmonization has already been achieved by AOFI. However, such Sharia standards are not applicable in many countries. The recent development is the UAE, okay, where central bank has made it mandatory for all the Islamic financial institutions, specifically Islamic banks, to comply with the AOFI's Sharia standards. Bahrain, Sudan, Kuwait has already adopted full-fledged applicability of AOFI's Sharia standards. These were the few concerns or challenges to the Islamic finance industry globally. And with this last slide, I say thank you to all for hearing me. If you have any questions, you can raise it, but I think the time is already over, and here in the UAE, Maghrib time is already there. So I can take a couple of questions just to wrap it up. And Firoz, is there any other further slide?
Yes. Let me just check. I think that's it.
Yeah. My
Just
email was mentioned.
yeah, I think it is.
Okay, fine. Yeah. So if you have any specific questions, you can reach out to me at yasirwazim@outlook.com. And if you want to understand something or you want to inquire about something, so inshallah, inshallah, I'll definitely respond to you. And the slides will be shared by Firoz. Okay. So if you have,
Yes, sir.
Firoz, we have questions.
Let's. Yeah, yeah. I was about to say that we have question. Let's take these questions so we can wrap that up in time.
Correct.
So
Yes.
Afzal Hussain is asking, is Salam like assets on installment? Can you please invite advise on that?
Salam.
Yes, Salam. Sorry.
Salam is asset. No, Salam is a product. See, specifically at the time of Prophet Muhammad sallallahu alaihi wasallam era, at that time, certain farmers were not able to cultivate their products. The reason they don't have money at that time, so they asked a specific permission. So the specific permission was given to those farmers. What they did is they don't have money at that time, so they basically got the money from the other party, and they cultivated, and they basically develop let's say dates, and these dates were sold later, were already sold, but the money has been taken so that they are able to cultivate it. So mainly these are used for agriculture products. Salam is used for agricultural products. They are not used for anything else. But in Pakistan, salam is used for currency as well. But AOFI doesn't allow
Okay.
currency-based salam.
Okay.
If you want to
Let's
understand the
move on to the
details
next
of the
question.
salam product, there is a specific Sharia standards. You can go and go through that standard. If you have a specific questions, you can write to me and I'll answer that. What I want is I want to take only the general questions specific to the product. Obviously, it will take a lot of time to explain it, and I think we are already running out of time.
Okay, so the next question is from Kashif Ijaz. It's a lengthy question, but I'll just summarize it. Kashif is saying that we see that Islamic banks are offering products on percentages of profit or cost that is similar to to the cost of finance that is being offered by conventional banks. So, what is your say on that? Why these products are priced at par? The Islamic products are priced at par with the conventional banking products.
So you understand, Brother Kashif, that we have to be competitive as well. There is no harm in to be competitive. If we will not charge the same price, so how can we in the market? We want to grow further, so we are not charging over and above. If we're just charging at par, so it's fine enough. There's no harm in that. And if the conventional bank charge that profit, so we can charge the same percentage. We are not going beyond that. I don't see any harm in this one.
Okay. Next question is from Muhammad Munib, and Muhammad Munib is saying that uh, it is sometimes quite, or it can be quite disturbing when you see that there are a lot of people who want to uh, take financing options from Islamic banks, but there are very little people who are interested in offering financing options to the bank. See, lack of resources available to Islamic banks. So, in this scenario, will a Islamic bank borrow from a conventional bank on Kybor? Is it possible, or is it allowed?
See, this is a very common question that uh, why we use Kyber. Kyber is a index based on interest, right? Kyber is the average lending borrowing rate for Karachi Interbank, and Karachi's 15, 16 banks. Okay, so if the basis Kyber itself is on interest, so why we are considering that for our pricing purposes? See, just to price a product does not make the product itself haram. Okay, so pricing is not an issue. You can use any yardstick from Sharia perspective. That's not an issue. Just to be competitive, you can use that one. Okay, otherwise you cannot be competitive. We seeing our opportunity. These conventional banks are all our opportunity. We have to be competitive, so we use the similar pricing index. Okay, but see, initially we have to use it, but as and when we are moving on, certain countries have developed their own Islamic banking offered rate. Okay, I think some countries have adopted their own Islamic banking offered rate. So Karachi Interbank offered rate is for the conventional bank. So there would be Islamic Interbank offered rate as well. So Islamic banks, what they're basically involving in between them. So the average percentage can also be devised. So I don't see any harm, and the Sharia has no issue using the just one second using the interest-based pricing index. Sharia has no issue in that. One thing I want to mention here with Kashif's question, um, yes, as I mentioned that there's no problem that we can charge the price at par, but in some countries, in Pakistan as well, this is the 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 Islamic Bank must be at par from the deposit holder perspective. So the return given to deposit holder. Here, they're not at par. They're a little bit low. Sometimes some of the banks are far below than what their conventional parts are given to their deposit holder. Okay, so they have to raise this somehow to make it near par. So this is a concern. Charging a price on based on the Kyber or being competitive in the market is not an issue. But giving back to the deposit holder, it is necessary that we should compete here as well, and we should give at least or near to par to the deposit holder, return to the deposit holder. The return to the deposit holder by conventional bank is around 8 to 9% average return. Uh, mm, Term deposit receipts and fixed deposits are earning around 8 to 9% interest rates. The similar are not given by the Islamic banks in Pakistan, so it should be raised further. It should come near to the conventional banks rate of return on the deposits.
Okay.
Any
Last
further
question
question?
from Amir. Yeah, just last question. Amir is saying Islamic banks are not offering credit cards. How do you see that, Amir? There are banks in Pakistan who are offering Islamic banks who are offering credit cards, and yes, there are banks which are not. But I think Yasser can answer that.
Yes. Basically, in Pakistan, Mizan Bank is not offering one of the premier Islamic bank, not because it's just because there's some Sharia concern. The problem is that they don't see a business in this. So in Middle East, almost all the Islamic banks they have a covered card or credit card. The products have been developed, okay, and they are further modified. So banks like Dubai Islamic Bank, Abu Dhabi Islamic Bank, in Kuwait, Qatar, Saudi, all the banks, big banks, Islamic banks, they are offering covered cards. Pakistan, even certain banks, Standard Chartered is offering covered cards. I'm not aware about Mizan Bank. Might be some other bank, Bank Islami or other might be uh, offering cards. But I know one at least, Standard Chartered is offering, Standard Chartered Islamic Sadiq, they're offering covered card, credit card. We call covered card or credit card both.
Okay. Thank you so much, Yasir, for your time. I think that's all for the questions, and I would like to thank all the participants who have joined on a weekend, and thank you, Yasir, for joining on a weekend as well. This was our last session of the Powerhouse Series BFSI, and this experience was quite interactive for me as well, and I believe for the rest of the participants. And I do believe that it was helpful from the feedback that I have received till now. It was helpful. The session was helpful to our members working in the BFSI sector. So what you guys need to know is if the session has been concluded, what we'll be doing is we'll be working on the attendance and sharing the CPD certificates based upon your participation in the coming week. And the next lineup of the Powerhouse series is taxation, which will be launched by the end of November. And you all will be notified that through the email announcements. Thank you so much, Altaf, for your kind words. And you guys can reach out in the WhatsApp group that has been prepared for this sole purpose. We'll discuss if there is a need to keep that group or just to disbar it. And we'll see what you guys have to say on that. So, anything that you want to add, Yasser? I don't want
But
to hold
that's
you.
in the end. I just want to add that if you guys really want to listen from me, then write to ACCA that there are many topics which we can have webinars. Okay, uh, important topics would be IFRS versus AOFE standards. Okay, uh, we can have some detailed session on the mode of financing, six mode of major mode of financings. We can have detailed sessions on even a single mode of finance like HRA and comparing it with the Islamic finance lease and with the AOFE, AOFE with the IFRS, or in general, what are the differences between AOFE and IFRS. So a lot of things can be done if you guys are really interested in learning. So we can really make out the sessions, inshallah, in future.
Thank you, Yasir. Thank you. Thank you for your time. Thank you for your input, and thank you for the suggestions. We'll definitely work on this together, inshallah. And thank you, everyone, for your time and for all of your efforts. I'll be meeting you guys soon in maybe next other series, and we will be working on our professional development in the coming sessions. So thank you once again, and have a good weekend ahead. Have a good year ahead, and that's it. Thank
Same
you.
from my side. Jazakallah khair to all of those who have attended this session. And if there is any mistake from my side, I seek apologies. So thank you very much once again. Take care. Assalamu alaikum warahmatullahi wabarakatuh. Firoz, should I disconnect? How should I disconnect?
Yes, you just quit from the platform. Go to webinar.
Okay. Thank you very much. Assalamu alaikum warahmatullahi wabarakatuh.